So I'm convinced that this clock runs fast. So we're going to dive right in. And I think the people in the audience will, through the questions, get a flavor for who we're talking to. But I'm going to set aside long bios now. Matt, I want to start with you. As I understand it, this is your first trip to Israel, correct? Matt's been investing in ed tech in the US and around the world for about as long as anyone's been doing it. One of the differences is he's been doing it successfully. So I think you're in a great position to make the case for ed tech. So why have you dedicated your career and your capital and other people's capital and institutional capital to this sector, which in Israel, at least, some would say, like, what are you, crazy?
Yeah, so your partner Mikhail's slides each contained one or more of the companies that I have been lucky enough to invest in. But the Trilogy acquisition was particularly significant. It was, at the time of the acquisition, based on the stock price of 2U, it was a $750 million acquisition. The acquirer was a Fund 1 company of ours, acquiring a Fund 2 company. That's the first time that's happened. 2U is a company with a multi-billion-dollar market cap. So there are definitely large outcomes happening. Another fact that I think some people might find interesting or surprising, we've had a number of exits from Fund 1. We've also only had one write-off out of 20 positions so far. So actually a lot less risk and fewer mistakes than one finds. And I don't think that's any special genius on our part. You know what the biggest single mistake that startups make, the largest killer of startups? According to Crunchbase, it was 42% of all startups are killed by this problem. It's building something that nobody cares about because you're not addressing a real problem. So I'm proud to say that because I got into this to make the world a better place and not just to make money, I have never invested in a company that was not trying to solve a real problem with real human suffering attached to it.
So you made an interesting analogy between Utah and Tel Aviv. I just want to dig into that a little bit. I mean, is it fair to say that Utah and Tel Aviv can be similar, and entrepreneurs in Tel Aviv are fully capable of creating large, successful companies the way the folks in Salt Lake City have been able to do?
Yeah, unquestionably, right? There's the dense interconnection of social networks. There is the history of existing startups. In Utah, it was companies like Novell and WordPerfect that laid the groundwork. And it was people thinking big, thinking about solving problems on a global scale. I think it can happen here too. If you build something, a little tiny app or a feature, then it won't happen. But if you set out to solve one of the world's big problems, it can happen.
Okay, so Hanoch, I want to turn to you. As I understand it, you've been investing actively across a number of different segments of the economy. Ed tech, and we'll get to whether or not that's a confusing term or an appropriate term, is not one where you've allocated capital yet. So as you hear Matt speak about successes in ed tech over the years, is there anything that you believe that exists in Israel, in this ecosystem, that could create maybe different outcomes or constrain opportunities relative to what Matt's describing from the US perspective?
First, like as a note here, I'm seeing my name there versus like aside Discount Capital. For those of you who don't know, it's a subsidiary of Discount Bank. We do not provide discount capital. Our capital comes at a premium, a higher one if possible. So.
Or you use a very high discount rate.
I just noticed, and I'm wondering what people think about Discount Capital. That does not happen. But to your point, yes, I mean, we essentially, at least in the technology world, operate more on a sort of fund-of-fund basis. So it's not very often that we invest ourselves in emerging technologies. Honestly, I don't see myself as a person with the capability set and the experience. But we do support funds. And I mean, the one thing that's happening in Israel, at least today, is that I'm not seeing too many of those in Israel. So you're talking about an ecosystem, and the question that I'm asking myself is whether there is an ecosystem. And in order for an industry to thrive, I think, there's like a whole process of things, there's a whole industry that needs to happen. I mean, you need to have people that, fund early stage ventures, so, the type of angels that are there, and then you need, the later rounds, and then you need people to buy at the end. And when there's money, I'm sure there's going to be great ideas, and it's going to create an ecosystem. And so far, this is not something that I've seen very often in Israel, with the exception of, I guess, the sort of the impact type funds that do support this industry indirectly and not exclusively. So, the one question I have back to Matt is, I mean, is this an industry that's been developing, that's already developed in the US? Is there an ecosystem? And why is it not happening in Israel? So I'm bringing the question back to you guys.
Yeah. Well, I'd love to have Matt respond, and I think some of us might as well.
There's the very simple fact that the US is a third of the world's education spending, and makes it a little bit easier.
There's also a for-profit education market in the U.S.
Sorry?
There's a for-profit education market in the U.S. that has spurred a lot of investment.
Here you don't even have private schools. But I think it can happen here, and I visited a startup this morning. Any of you know Strigo? Okay. Strigo's a pretty awesome company. Don't tell the other venture capitalists, okay? I want to get some money in. There's the potential, and you don't need a whole ecosystem in order to have a great company, really. With companies like Fiverr, what was the ecosystem around Fiverr? No, they just built a great app.
Right. So, and I would say an ecosystem has to start somewhere. And if you look back 5 years ago, when we first started getting into this, there really wasn't much going on. Shahar has been participating with Amalia in this, to build this ecosystem and solve a capital problem. In the interest of full disclosure, they're now our partners in raising a new fund called NETA to also provide more capital and continue to evolve the ecosystem. But could you comment, Shahar, on how you've seen the ecosystem, if that's a term we want to use, develop in the last 3 to 4 years? Where did we come from, and where do you think we are today, and where do you think we can be in 3 years from now?
Yeah, okay. So I'll learn from Hanoch, and I start with explaining the name, I think. So NETA in Hebrew, you probably know, the Hebrew speakers, is seedling. Also stand for the fact that our fund has 2 legs, one in New York, that's the NE, and one in Tel Aviv, the TA. And in a way, the name we gave also represent the challenge that we try to tackle. For the comparison between Utah and Israel is that Utah is placed in a very big market, and Israel is not. And the way to do that is to give bridges to make the distance much more easier for early stage startups. And another aspect of the name, just recently we changed the name before called EDvantage, EDvantage, and it represents the way we thought about the world in the beginning, because we were very focused on education. And on our learning path, we understood that this is probably not the best way to see this ecosystem. It's not an ecosystem of education. It's not an ecosystem of edtech. It's an ecosystem of what we call talent tech, meaning that we have to tackle or have to find solution to a real problem that people have facing their career paths, skills gaps. Those are the problems that humanity is now facing. And technology, in one hand, is the cause for these changes that cause the skills gap, but on the other hand can be the catalyst to solve the problem or to make for people and for companies much more easier to tackle those problems. So back to your question, I think that along those 4 years that we're involved in the market, we see more and more companies that thinks the way I just described, more and more companies that try to find real problems that real people or real businesses have and try to solve them using technology, which Israelis are pretty much good at. We see more entrepreneurs that came from, that are second-timers in being entrepreneurs. We see much more problem-solving attitude and not technology-solving, not technology-using attitude. And Mesuggo is a good example, one of our portfolio companies. And so I'm glad that you met them.
So
get me into it.
So, you know, in the U.S., I think another catalyst to the buildup of the edtech industry has been the participation of strategic investors as well. And some of the most meaningful investors in the space have been, you know, conglomerates like Bertelsmann and Hearst and Advanced Publications and the like. My view was in Israel, when we started to see strategics moving in wherever they were coming from, and it didn't necessarily mean that they were, you know, growing up in the education sector. They could be adjacent to the education sector, moving in and helping us to expand the definition of edtech. I think the definition of edtech, like in the US, when we talk about edtech, we're not just talking about classrooms and K-12, we're talking about workforce and human capital. In Israel, I think the definition, at least a few years ago, was very, very narrow. As you could see, as this conference has evolved, it's expanded to incorporate higher ed and workforce and the future of work, et cetera. The fact that Amdocs has a VC arm, in my mind, is reminiscent of, you know, trends that have occurred in the U.S. as well. So, Moshe, I'd love to understand, you know, and it helps to validate the point that edtech just isn't, you know, classroom, it's workforce. So, how is Amdocs thinking about having a corporate VC and how you're going to put that capital to work?
Sure. So we've got an investment arm, relatively new, so it's been around for about a year. The goal is to be forward-thinking about the problems that our customers have and that our customers will have and that we will have in the coming years, not things that hurt now, but things that will hurt in the next 2 or 3 years. Just a little bit about Amdocs. People don't know it's the largest Israeli software company. Traded on NASDAQ, about $1 billion of revenue a quarter, mostly, vast majority from the telco space and the cable media, so telco, cable, and media. So we look at education as, you know, from a very corporate angle, that after they graduate, you know, they enter the workforce and then the education continues. So it's kind of an extension. In Israel, actually, workforce education probably starts earlier than it would in a more liberal arts type education program like the United States. So you could actually argue that workforce education in Israel is actually what happens in the army and what happens in higher education here in Israel. So we view this as an extension. We view ourselves as educators. There's no way around it. Someone had a slide up earlier today about the speed of innovation in technology. It's increased so much that we need to retrain our workforce on average totally retrain between 24 and 48 months. Like we have to, it's almost like restarting. We can either go out and rehire, but that's amazingly inefficient. We don't even know what skills we need, 3 years from now, right? Because the technologies haven't even been invented yet, or they're being invented. So we have there's a need for agility around technology and technology creation that as a venture fund, we're looking to seed and create that ecosystem for the benefit of ourselves and for the benefit of our customers, and be in a position when we hit the wall of retraining and rehiring, we'll have enough interesting companies around us to help us all through it.
Thank you. So I can see the clock is moving much quicker than it should be. I want to change topics now and talk a little bit about impact investing. You know, I noticed a few years ago when I talked about EdTech and tried to convene a panel, everybody was pointing me to impact investors, and I couldn't really find any, you know, quote, ROI investors. Amalia today had a great point. She said, of course I'm doing impact, like it's EdTech, it's improving human capital, we just don't need to call it impact. Matt, in the US, impact has crept into the conversation of ROI, traditionally ROI investors. Can you explain what that's doing, and is it a good thing or a bad thing? What does it really mean?
Okay, so first, not all education companies have a positive social impact. There was one company that some other education VCs got very excited about. We noticed, A, they were stealing people's IP, and B, they were facilitating cheating. That was their main use case for students. So they don't all qualify.
That wasn't a good business?
What?
That wasn't a good business?
Well, it's a good business until it isn't. And that's one reason why impact investing is just better investing, because it's a risk mitigant. Education is a very politically sensitive area, heavily regulated, even workforce learning is. And so if you do something that is taking advantage of or hurting some of your stakeholders, it's going to catch up to you. You may be able to get out and cash out of the investment before that happens, but basically the impact filter you should think of as a risk mitigant rather than a return reducer. But also, a company that has a strong social mission has a crucial advantage in the war for talent. The ability to attract the best talent is ultimately one of the key determinants of success of a tech business. And if you have two companies that are otherwise similar and one has a stronger social mission, the one with the social mission is going to get all of the millennials. They're literally willing to take an 80% pay cut in one case. We have a COO at one of our companies, used to be the CTO, who left and went to a place that was paying him 3 times the salary, and then he came back. He missed the mission.
Hannah, have you allocated capital to any impact funds?
Actually, we did, but not because it was impact. I mean, it's much simpler for us. We constantly look for areas where there is sort of a need for funding and not enough funding. And this sort of arbitrage in supply and demand of capital is often a strong indicator of solid performance. So if you're investing in an area where you think there's not enough money and there's demand for money and great opportunities, and if you're the first to go there before the supply and demand curve sort of balances, then you're going to make money. Impact is something that nobody pays attention to in Israel. There's been at least only one fund that I know of that started in Israel. It's called Bridges. You know these guys, by the way?
Sure.
By Sir Ronald Cohen, and we've supported it. We're the largest investor there. I think one of the only few institutionals, we're not really an institutional, but one of the only banks, I guess, or institutional investors in Israel that supported this fund, but not because we need to make an impact. That's not the agenda that we're coming from. We're coming from the agenda, I guess, that Matt has pointed to, that businesses or entrepreneurs and talented people want to make an impact today and not just make money, and these guys are attracting top talents. And if that's the case, they're going to make better returns than others. So we're coming from that perspective, and I think the story of EdTech might be similar in that sense. There aren't too many. If there are great opportunities and if there's talent that's going to support this industry, I don't see a lot of capital allocated to it in the meantime, which creates an arbitrage. I guess this is why I'm here today. And this is the good news. The bad news is that I don't see many of people that I know around. I've been spending a couple of hours here, and there aren't too many people that I know. So either I'm an early adopter, or let's see what's going to happen.
That's the $100 million question, I
I
think.
know.
Moshe, when
Less than 100 million. Let's just let's settle on less at the beginning.
Okay.
Let's see how it take a discount.
I
on
have
that
my
and see how it
investment banker
develops.
hat on. It's $100 million. Moshe, when you talk to your folks at Amdocs about your objectives, is it purely financial objectives or are there strategic objectives, which means you would accept a lower return on an investment?
First of all, one of the objectives of setting up an investment fund is to give back to the entrepreneurial community that gave birth to Amdocs. Amdocs is probably one of the milestones in the entrepreneurial history of Israel. Obviously, Morris Kahn with what's going on with Space IL, and his investment in education is critical, and we feel that within the culture of Amdocs. So there's very much a sense of giving back to the community. The market here is small enough that big companies typically are faced outwards. So this is a chance for us to be faced back inwards.
Thank you. Last question for Shahar. What do you like these days? What have you seen? How has your investment appetite changed over the last few years?
We've talked about it in previous session. I think that AI is the hottest topic in this field, and many applications of AI coming out of young startups now, both in the recruitment size, learning size, and so on. More toward corporate problem solving, both in the onboarding process, screening that based not on knowledge but on competencies. All those can be provided by those kind of technologies, and we see a lot of startups that tackling all those aspects.
Okay, well, I think we're out of time, correct? So thanks to the panelists and thanks to the audience.